A 9.5x return before the end of the Bitcoin bull market? Hey guys, it's your big dreamer and doer G Dinero coming to you today to break down another trade. This time it's an IBIT January 26th $60 synthetic long, and it's custom. I'll show you what I mean by custom in a moment. But remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's dig right in. What's the rationale behind this trade? Well, part of it is Bitcoin's making new all-time highs right now, and I was looking for a way to capture what I believe is going to be the last 6 to 12 months of this bull run, right? The last thing I want to do is plow in a ton of money right now only to get a 10 or 20 or 50% upside from here, potentially, maybe more. But if I suspect that Bitcoin is going to go from 111,000 maybe to 150,000, which would represent another 40% from where we are right now, rather than going and buying spot Bitcoin, what could I do with options and what could I do in the equities market that would allow me to generate an even bigger return? So that's what I was looking for. Here are some of my assumptions: that I believe Bitcoin is going to peak somewhere between November, December, and January, somewhere in there. Yes, it could run longer. Sure, it could peak before then, and we could already be going into a bear market by then. We may never have another bear market. There's a lot of things that could happen between now and then. But if we believe that there's the highest probability of it peaking later on in the year, then this strategy would make sense. And I believe that Bitcoin's going to peak somewhere around $150,000 or more. I'm of the belief that we could see $250,000 this cycle, right? That could happen. On the downside, maybe only 120 or 125,000. So I'm not in the business of predicting exactly where it's going to go to, but I'm assigning a high probability in my analysis here that it's going to go to 150. And I want to be able to use the margin that's in my stock account instead of going out there and selling pure form Bitcoin, right? So if I was going to go and make a few $100 leveraged bet on Bitcoin, what could I do with options instead that would replicate that? So here's the trade. First of all, and I did this trade today in my account. So I sold the January 16th, 2026 IBIT $60 put for $8.30. So I collected $830, okay? And that comes with it some assignment risk, meaning I've agreed to buy somebody else's shares of IBIT for $60 a share on or before January 16th, 2026. So I need $6,000 to be able to collateralize the put side of this trade. Well, the good news is I have that amount of margin available to me in my equities account. And the good news about that is they're not going to charge me margin interest on it unless I actually get assigned the shares and spend the money. And the likelihood of that happening early is pretty low. It's pretty low, right? It could happen if Bitcoin tanks and goes all the way down to $60,000 or $50,000 and IBIT drops all the way back to, what would that be, $30, $40 a share. There's a high probability that I would get assigned, right? But I don't see that happening between now and when I go to take profits on this trade, but I just have to throw those risks out there. I bought the January 16th, 2026 IBIT $60 call for $13.45. So I spent $1,345. And again, this is called a synthetic long when you do it this way. It mimics owning 100 shares of stock for far less upfront capital. And so you can put more of these trades on at the same time. In addition, rather than just doing a straight up synthetic long, what makes this a custom synthetic long is I also sold the June 20th, 2025 IBIT $70 call for $1.42, or I collected an additional $142. So you could look at this as a bull call spread, a diagonal bull call spread that I also sold a put against, or you could look at this as a synthetic long that I also sold a short-term call against. And that's the way that I'm looking at the trade. So it resulted in a net debit of $3.73 a share. So I sold that covered call out good for just under a month to help offset the initial cost of this trade. It lowered the cost of the trade by $142 up front. So the whole trade was $3.73 a share, or $373, making my break even $63.73 by January 16th, 2026. We're already there right now. Right now, currently with IBIT, we're there. So any upside movement from where we are right now currently is going to result in this thing immediately going into profit. What are the risks? Well, the risks are losing the entire premium that I paid. I could lose the $373 that I spent up front if Bitcoin goes down, and thus IBIT goes down with it, closing below $60 a share, resulting in being assigned the share. So I'd have to pay $6,000 for 100 shares, and who knows what they're worth at that time. I can't imagine they would go to zero. I guess it's a 0.00001% chance. But what if Bitcoin drops, like we said, down to $60,000? IBIT would drop down to probably $40 a share, somewhere thereabout, and I'd already be in the hole then. I'd be out the $373 I spent up front, and I'd already be in the hole about $2,000 on the shares that I bought. The other is that what if IBIT moves really fast and you get called out of the call portion of the synthetic long? So what if that covered call executes and there's still a lot of time left on the synthetic long, and we gave up all that extrinsic or time value that's left on the synthetic long side of things? Because if the covered call triggers, it's going to call away the long call, leaving us with just the put at the end of the day. Right? So that's the other thing that could happen. That is a risk. This is what it looks like on Optionstrat. Hi, sorry for the interruption, guys, but a lot of you ask, what is this Optionstrat that you see on the screen all the time? And it's what I use to help me build trades, be able to visualize them in real time, track them by looking at my saved trades list, and generate new ideas, right? What are some of the ideas that I'm trying to come up with whenever I'm trading options? So you'll see here it says you can predict your strategy, optimize ideas, view unusual trades. It's a next generation's options profit calculator and flow analyzer. Basically, it's helping you be able to build your trades. So you can see that in here. Tons of different trades that are available for you to build. There's a whole section on tutorials. You can see that up here in the upper right-hand section. Make sure if you're going to do this, use my reference code is GDinero. Super easy. Optionstrat.com/GDinero. It'll help you save a few bucks off of your membership. And here are some of the tutorials on how to use Optionstrat along the way. Some of the other things that you can see is you can see all kinds of saved trades. You can have all your trades saved on here. Also under tutorials, you'll notice they have their own YouTube channel, so you can learn that way, and daily tips to also learn that way. So check out optionstrat.com/GDinero, and let's help you make your options trading that much more successful. Take care. And so you can see here it's $70 at $70 a share. If it hit that by June the 20th, then we would get called out of the call portion of our synthetic long. That would result in what's the difference between the two strike prices. The $70 call would call out the $60 call. There's a $10 spread between those, so that's $10 a share or $1,000, minus what we spent up front for this trade, which was $373, resulting in a profit of $627, right? And we would be left with the put. The put would still be open, but it would have already lost some of its value because we've already gone now from $63 when I put this trade on up to $70 a share. So the put side of things would be going further out of the money. You could ride it out until you're in a certain amount of profit. There's a lot of different options available to you, pun intended, at that point. But you also have a choice. As you start narrowing in on that on the June the 20th, that $70 short call or covered call, what if instead of getting called out at $70 a share, the covered call portion expires worthless by June 20th, meaning IBIT is below $70 a share? Or what if I buy it back to close that portion of the trade out and allow the synthetic the synthetic long to run from there. And this is what it would look like on Optionstrat. So it would look like this. If we exclude that covered call, assuming that on June 20th it expires worthless or we've bought it back, then the rest is just pure upside profit as IBIT continues to run. So Bitcoin runs, IBIT runs, the rest would be pure profit. In this particular case, I targeted $85 a share. Why $85 a share? Because if a Bitcoin is hitting $150,000, IBIT will be right around 85 to 85.50 based on the amount of Bitcoin per share that they hold as an ETF, okay? At $85, there's a $25 spread between that and the call, right? The put would expire worthless. There's an $85 spread, a $25 spread between 85 and 60. That would result in you collecting $2,500 plus you have to take out what you spent up front, which was $373. That results in a $2,127 profit or a 6.7x return. But it gets better. Let's juice it up a bit, right? So what if instead of buying back that call, and what if instead of allowing it to expire worthless, what if I just kept rolling that call option up each month instead? So I take the June 20th covered call and I roll it up to a July 18th, and then I roll it up into an August contract, and then I roll it up into a September. And I do that every month for 7 months, all the way straight through January of 2026. And I believe you could easily generate $1.50 a share each time you do so, right? I collected $1.42 up front at the beginning of this trade, and that's selling a call option that was $7 out of the money or over 10% out of the money at the time. So the likelihood of being able to do this over the next 7 months and increase your share price or your strike price by a couple dollars or $5 each time and still collect $1.50 is very doable. So if you collected $1.50 a share and you did that for 7 months, that's $10.50 a share that you would collect over the course of the next 7 months. So that would take the $3.73 net debit from this, putting this trade on up front, and turn it into a $6.77 net credit. That's $10.50 worth of money that you collect over the next 7 months, minus the $3.73 you spent up front, results in a $6.77 net credit. Now, what if Bitcoin goes to $150,000, which again implies that IBIT goes to $85 a share? The put's going to expire worthless. The call is going to be worth $2,500 like we showed in the previous example, plus the $1,050 that we collected along the way with the covered calls equals $3,550 total. That minus what we spent up front on this call results in a $3,177 profit or a 9.5x return. This is what it looks like on Optionstrat. Again, I'm eliminating that covered call on here because we're saying that we've just rolled it. You could even sell that final covered call at 85, and if IBIT's at 80, 88, 89, 90, 100, if IBIT's over $85 a share, you're going to get $2,500 for what's left of your trade on January 16th, 2026. Of course, you could always close it out early if it's already in this type of profit, and that again is a 9.5x return. So if you want to see more content like this, make sure you like this video. Make sure you subscribe so that you can see more videos like this. And comment below. What did you like best? What do you want to see more of? What made sense to you? What didn't make sense to you? Book a course with me. If all this sounds gibberish or Greek to you, book an understanding options course with me. Book a TradingView or technical analysis course with me. Do what you got to do so that you can learn this information inside and out so that you can increase your financial literacy and help set you and your family on that path to financial freedom. Thanks for tuning in, guys, and we'll see you next time.